More on the airline industry. We are joined by Hunter Keay. He is an airline analyst at Stifel. Nicolaus Keay is cautiously optimistic about the sector's future. He joins us now from his firm in Baltimore with more on that story. And Hunter, welcome to Bloomberg News. Good to see you again.
Thanks for having me on.
Hunter, before we even get into this, we had some news earlier today. US Airways cutting 1,000 jobs. What signal does that send to you?
Well, it's not much of a surprise given the fact that visibility is still so poor on the demand side. Airlines are still in cost conservation mode, and as you mentioned before, the volatility of fuel is a major concern for them. So they're focusing on the costs that they can control, and unfortunately for the employees, labor is one of those costs. So as long as fuel is very volatile, and remember, US Airways is completely unhedged for next year, they're going to have to focus on reducing costs wherever they can. Unfortunately, headcount reductions are one of the areas of low-hanging fruit.
And Hunter, reducing cost, I would take it this is something that is not just endemic to US Airways. This is across the board, especially we come into this seasonal time when airlines traditionally burn a lot of money.
Exactly. Airlines usually burn cash starting around Labor Day, and they usually start to build cash in late February or early March. So that's a long time, and that is also predicated on the assumption that demand is going to return during the seasonally strong periods of April, May, June, July. And given the fact that visibility is so poor, airlines don't really know what that return of demand is going to look like. Is it going to be low yield? Is it going to be high yield? Corporate travel? They don't know yet. So at this point, all they can do is sort of shrink down and sort of just burn down the hatches and make sure they survive.
Hunter, there have been a lot of reports that going into the holiday season, Thanksgiving, folks who are traveling at the end of December as well, that they shouldn't wait this year, that prices are going to keep on going up for many airfares. What does that tell you? I mean, are consumers not pushing back against prices going up?
Well, I mean, you know, there is going to obviously be some demand erosion if prices go up, and it's not just going to be limited to the airlines, obviously. You know, if gas prices continue to increase, you're going to see some deterioration of demand across the entire consumer spectrum. But, you know, there are peak travel days, Thanksgiving, Christmas, New Year's being one of them, the holiday season, those are all peak travel days. But airlines are walking a very tight line here of pricing, and they can only cut so far. Right. They can only raise so much.
But Hunter, why is the airline, as Julie intimated, why is the airline still struggling with its customer treatment metrics? As Julie mentioned, they don't seem to be pushing back right now.
Well, I mean, this is an industry that unfortunately has a very bad stigma attached to it in terms of general customer service metrics. They usually rank very poor relative to other industries. You look at load factors right now, that's a measure of how full airplanes are. They're very full. So the capacity reductions have helped sustain pricing to a certain extent, but most planes, especially during peak times, remain very, very full. And that's usually going to result in negative customer feedback, so to speak, and customer service metrics are going to usually sag when that happens.
Hunter, we have to talk about consolidation when we're talking about the airline industry, of course. We were just talking about the Star Alliance now sort of being formalized at Newark Airport, some folks talking about that yesterday. Does that then mean we're going to see a combination, Continental-United?
I think that makes a lot of sense. There's very limited overlap on their domestic network. So from a DOJ perspective, DOT approval perspective, you have only 10 routes, under 10 routes domestically that are in direct competition with each other. So the pricing impact domestically wouldn't be that impacted dramatically. And internationally, the Department of Transportation has already approved worldwide antitrust immunity for both United and Continental. So that bridge has already been crossed, so to speak. So I think once the demand environment stabilizes a little bit, balance sheets shore up a little bit more, I think you're going to see these guys make a run at it.
And Hunter, what about any other airlines getting together? Do you think this is the only likely contender right now?
At this point, that's really the only one on our radar screen. I think any other combination brings up, competitive concerns, which I think the DOJ would have an issue with. So I really don't see much other M&A that makes sense for the majors, at least, anytime soon.
Hunter, we have about 30 seconds left. Is business travel going to return next year?
Well, that's the $64,000 question, and no one really knows. At Stifel, we're expecting more of a checkmark-shaped recovery, if you will. I do not expect a V-shaped recovery in corporate travel. I think you're going to see a gradual improvement of second derivative metrics, meaning the change in change. So inevitably, it can't get much worse because 2009 was really, really bad. But 2010 should be better. How much better? We're not really sure at this point, but marginally better.
And Hunter, in about 15 seconds, Delta, Continental, JetBlue, they still your favorites?
Yeah, we also like United as well because of, as you mentioned, the consolidation play. So Continental-United could get a pop if there is an M&A announced within the next couple quarters.
All right, Hunter Keay of Stifel. Nicolaus, thanks a lot for joining us to talk about what's going on with the airlines.
Yep.